The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, market days. And today, of course, I also did Tom's show a little earlier this last hour. So we'll continue with the analysis. And in fact, what we're looking at is a market that is holding up reasonably well, considering in the background there's a potential for some chaos. However, it is not that. It's that I'm looking at it in the sense that I believe that we're now getting a dark cloud cover, which is what you have to have, as well as a VIX index that starts to rise. If you're going to have a market that pulls back and pulls back in a sustained fashion. At the moment, holding in this area, and you can see it right here, I've got the E-minis. Look at this chart, look at that rectangle. You wouldn't believe it, but that rectangle has been in place since the 21.19 high that was made back on the 18th of June. Pulls back to 2097. And then starts a trading band just a little bit above that previous high. Now it goes to 21.22. And look, I've drawn in the rectangle. Let me make this extend. This is the 120-minute chart. Look, a rectangle. You would never believe with all this news. Boom, 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 up and down, up and down. We're actually just holding this coral color trend line at 2100, which is the 200 period exponential moving average. And look how the technicals have deteriorated. MACD looks terrible. If you looked at me, if you asked me and said, when we were here, we were in the 21.19 area. Where do you think we'd be right here? And I said, well, you must have dropped very sharply. And by now, let's see, I'd say 2107-ish. Right here. And in fact, we're at 2106. But if, in fact, I was thinking that you've used up all that time, then I would have said way below 2100. But thinking of a rectangle formation, I could say that this is about where you'd expect in a rectangle formation. You just keep trading. At some point, you're going to break the upside. But in the meantime, every time you get to the upside and you think it's a breakout, all it does is come back right into the trading band. As soon as you think it's going to break down, it comes right back into the trading band. So it's a propellant line and a magnet line. But if I was just looking at the price and I said, hey, over here you're in the 21.19 area, where do you think I'd be here? I would have said way under 2000. But having recognized that it was a rectangle formation, this is fine for now, but that's going to change. At some point, you see a long rectangle formation, usually, now I say usually, I mean probably 65, maybe even 75% of the time, it pulls back under the support. We'll see what happens. All right. Now let's do something else. I want to look at the parameters that will be very important. And for me, it's real simple. If the E-minis start to trade under 2095, that's just 10 points, 100 points in the Dow, 10 points here in the E-minis. If it trades there, it's suggesting that the daily chart, now we can go to the daily chart, that the daily chart is beginning to deteriorate, and in fact, that will pull the technicals down. But at this point, the technicals are holding okay. There's somewhat of a divergence with the MACD being so low, although it's positive, much lower than it was over there at the 2126 level, and the stochastic is at 78% under the 80% level. So what we're looking at here is every time there's quietness with the Greek scenario, the market tries to rally. To me, that says they're still buying extant, but it is becoming more and more and more and more selective. And that's important for us to look at. All right, let's just run the numbers. The Dow, let me move this away here. The Dow's up 41 at 18,007. The S&P is up 7 at 2115. The comp index is up 18. Hey, it's improved quite a bit at 5140. I think that's because Amazon. Did I see Amazon start to move up? Yeah. Oh, it started to pull back, hit the 9-period moving average, and now it's up 96 cents at 441. It's making a peak E. It's made a peak E, actually. This is going to be very interesting because the weekly chart says that Amazon should have one spike to 452.66 or higher for leg D. And the daily chart says, gee, if it does that, it might pop up, but is liable to pull back down very quickly after that. So we'll watch this one real closely. In the meantime, back to the ranch. Gold. Let me show you the gold chart right now. Gold is down 80 cents at 11.72, just doesn't have strength. Weak technicals all the way around. And we were talking about the commodity. Of course, I completely forgot again. I must find my commodity index that I use to show you the commodities have just been in a bear market. I mean, this is a deflationary period for those commodities. So in the meantime, back at the ranch, you've got a gold down. It's at 11.72. Silver's down a little bit. It's at 15.80. You've got platinum up 7 at 10.83, and you've got high-grade copper up 10 cents. Just real quickly, let me show you what I mean when I talk about deflation, international deflation. Copper's trying to rally here. It's a kind of a pathetic little move when you look at how far it's come down. The monthly chart is trying to test that 200-period moving average plus that very long-term trend line in the continuous contract. Look at that trend line. Actually, it is a really long-term trend line. Look at that. Actually, you know what? It moved a little bit because this is a continuous contract. That's where it should be. There you are. So you've got these lines are very important. It says that at some point, copper should go down from 2.6 down to the 2.3, 2.2 area, looking at a more intermediate term. But in the meantime, it's not doing all that well. Now let's go to the TLT. The TLT bonds. TLT is now down 65 cents at 116.30. That to me intimates that there is some buying, that money is not moving out of the safety of bonds, but going into the safety of bonds. In fact, it's still filtering out, and money is in some ways going into stocks. Otherwise, we would have been down again very sharply today because there's this dark cloud over us. So this is good action in the market. And bonds, the TLT has 114.80. Let's call it the 114s. It's going to be really important. It's like a magnet for the TLT, trading at 116.31. And at the same time, it should become a propellant after a period of digestion. And the monthly chart did make a peak D at 138.50 in a cup formation, breakout in a Chapman wave cup and ladle formation, goes to a D, pulls back sharper, then just the lip on the left side of 132.21, goes to 138.50, and then plunges down to 116. That is 18 points. No, 22 points. What am I talking about? 12 points. Down. And no. Yeah, 22 points. Hey, that's a big move. 22 points in the TLT from the most recent high back in January, the first week of January, I believe it was. Yeah. Hey, that's a sharp move. So there could be a bounce at any particular point, but that bounce better take it to the 118.50 level by Tuesday or Wednesday of next week. Otherwise, we're going to be doing more testing of the 114s. What am I missing? The dollar. Very important. Dollar tried to rally earlier. I drew in this very thick trend line to show you that there's trend line resistance, and it needs to clear for leg C. It has to go 95.65 and then move quickly to the 95.80s to 96.30 area, just to get away from this, to show that it has strength. MACD's turned positive. Stochastic's only at 42%. It really needs to get to the 65, 68% to show that the dollar is actually going to scream to the upside. At this point, it's just a bounce, and you've got a retracement from a peak D in the euro-dollar currency pair. And I don't think I've left out anything other than the USD JPY, and then we're going to look at some other things in detail. Yes, USD JPY just making an H that goes to another M pattern. if it fails and goes to 123. But if there's a move by Monday afternoon above 124.367, that's going to say, hey, I'm going to try to retest the high that was made at 125.847 back in early June. All right. What am I looking at? Question HEDJ. If I looked at HEDJ, look at so many charts, I never remember. That is the Wisdom Tree Europe hedge. Holding nicely. You know, it's got this same pattern, a little bit like the dollar, except it's gone to a B here, and it needs to go to, what was it? Let me just overlap that. DXY. Yeah, also a B. It's gone to a B. It looks very much like the dollar chart. And all I can say is that as a hedge, yeah, I think it's looking good as a hedge. And it's even called HEDJ, hedge. Got that. Okay. And the weekly chart is ABC, A, 5702. A, B, C, D. Made a peak D, pulling back, forming a potential, I say potential because we don't know, it's just the chart pattern we're looking at, a potential Chapman wave falling axe formation, lower declining cone, and it says that at any close in the 66.05 area or higher, it's at 64.38 right now, the Wisdom Tree Europe hedge, any push there, and I can immediately start thinking, aha, cup formation. Now we can start to try to tackle the highs. No, I'm going to say 66.35 to 66.55. That's what you really need. All right, so we've gone through a whole bunch of things here, and I have to look in the den. A couple of questions. A little politics. Boy, when politics comes into the den, I look away. Why? My contention is that you can talk politics as much as you want. Very seldom do you ever change anyone's opinion. And in fact, I read a really interesting thing some time ago, and I meant to follow up on it, which suggested that you are born with a conservative or a liberal bias. Now, that was defined as accepting other ideas, or accepting the other ideas but still remaining confined to the space that you are very comfortable with. So I thought that was very interesting, isn't it? And I've seen this for years and years. People I speak to, sometimes I'm not even prepared to mention the word politics because I just know exactly what their bias is. It's just not, you know, what's the point? And that's really my point. My point is, what's the point? Okay? You're not going to change anyone's mind. Very seldom, that is. Dow's up 34, S&P's up 5.16. Basil Chapman, Tiger Technicians Hour. I'll be back. Hey, give me a call. It's a slow day today. Never short a slow market. No. We'll be back straight after this break. I'm going to talk about the VIX again, as I did in the last hour. It's a very important index. I'll talk about it.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we are back, and this is really interesting. I had a question in the den about telephone. And I know I've discussed this many times, and I had a cell signal in telephone way back when there was this divergence. It hit the 39 round number in April of last year. And I said, I just don't know about the Verizons and telephones. There's going to be so much competition coming along with Google and others for the whole communication system. But as a pure chart that I'm looking at as a way of getting some income, I would just say that it's looking okay in a trading band, and I wasn't sure on a monthly whether I liked the look more of Verizon than telephone. And I could probably find it somewhere because I wrote it down. I just don't remember which one we were talking about at the time. I got a feeling that I was asked about telephone, and I mentioned that Verizon was the one that on a monthly basis gave a much clearer trading range between essentially 52 and 45, and that if it could just hold there, even if it bounced around as a dividend stock. Remember, my theory about dividend stocks is fine to buy a dividend stock if the chart looks good, because you want to have capital appreciation and the dividend. You do not want to have capital depreciation of 25 or 30%. And get you a 4% dividend, which you still have to pay tax on. What is the point? You do not want that kind of risk, because the whole idea is to ameliorate your risk. So you do not want to take it. So the question is in the den about telephones. So I'll do again the analysis of T. And looking at the monthly chart, yes, in fact, a Verizon chart has held very nicely. But when you look at it now with the latest move from the 33s up to the 36s in telephone, it's really come back very strongly. It's broken that resistance at 35. So what I'm looking at here is that on a daily basis, I've got a leg C. Oh, two C's. So I say, wait, ABC pulls back and it goes DE, and then it starts a brand new ABC. I'm going to stay with that. And as a defensive stock, this is holding well. It's telling me that the market essentially is saying that the high cap stocks, the high beta stocks, are maybe becoming a little bit more risky, and that these old stodgy, these old timers are actually holding quite well. So if you're long, I would say 34 to 35.50 is the area where I'd start saying, oh, I got to be a little bit careful here. I don't want to take another 1.5 risk to test the lows. But in the meantime, it's holding well at 36.30. I think it's going to go to leg D. And then when it pulls back, if there's a general market pullback and telephone, T is the symbol, trading at 36.31, up 53. This is the daily chart. If it can hold between 35.42, the 9-period moving average, and I would even go so far as to say 35.02 to 34.80 on any pullback without breaking down, and then try to rally back again, that was over the period of the next 3 to 4 weeks. That would suggest to me that, in fact, let me just go to the weekly chart. Yep, that would suggest to me that the rectangle that I would have drawn, I think I did, and then I took it away because it was getting messy. This rectangle here in the upper half of that particular chart pattern says that a break to the upside into the 36.50s or higher would raise the base of support to 36.10 to 35.80, and that's kind of what I would want to see if I treat it as a dividend stock. If I was buying it right now as a dividend stock, I'd have to have much tighter parameters. But if you are in it already, I'm going to say don't. It's your baby. I don't want to be influential other than to say to you, my thinking is that if it does pull back, it really has to hold the support in that, let's call it the 35 to 34s. It's really important to hold that support and try to build a base to keep going higher. But in the meantime, back at the ranch, it was very important that it made the peak D, the round number high, because the last high that it made back in September of 2007 at 42.97 saw it drop a little bit. It dropped all the way down to 20.90. So this has been a big move for telephone. It's in this range. I'm going to draw a rectangle formation right here to show you that's the trading band you'd like it to stay in. Hope that answers your question. All right, let's go to the next one. AT&T bought Direct TV. You know, I don't keep up with that. I hear it all the time. I have mush for memory when it comes to that stuff. I'm so busy with my charts. It's fundamental stuff. I do hear it, and at the moment I peruse it, I go through it, but then it's gone. So yes, maybe you're right, maybe you're wrong. I don't know. But if they did take over a service and acting well now, that's a good sign, because normally you'd see some kind of a pullback, and we're going to be watching that real closely. So now I want you to look at, just to see if there are any more messages there. No, okay. We've got a break coming up, and in this break, I will try to find my commodity index listing. And if I can find it, I'll be able to do something with the commodity index. Basil Chapman, Diamond Inflation's out. Dow's up 32, S&P's up 5. I'll be right back after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Yes, I did find it. The Reuters Equal Weight Commodity Index. That's what I was looking for. Symbol is dollar, TRCCI. And look, here it is. Here's the data. It went from a low bar of 407 back on the 18th of March to this high, peak F doji high of 439, round number. Oh man, those even in the commodity index to get a round number like that, 439 R/N high, amazing. And red. And what does it do? It pulls back sharply and then uses time. Just as it used time over there on the left side, is using time on the right side. So there's an inverse head and shoulders pattern fighting. The arch formation is fighting the cup formation, and all you need to see is a close below 416. It's at 422.72 right now for the lower highs, lower lows to continue. If, in fact, there's a bounce in the next few days about 426, that says it got the cup formation, you can make a right shoulder failure pattern, but it will be positive, at least on the shorter term. The intermediate term, however, has a look to it that says, this is the first, looks like Italy with a horseshoe at the bottom. It looks as if there's another pattern that's very familiar to us, that lowercase h, that comes after an extended move to the downside. And very often, you see this little tiny one here? all of a sudden you get a larger H pattern, and that larger H pattern could then make a smaller one or even a larger one, but it continually makes the pattern that says, I keep wanting to test the lower lows or the low that was made on the left side. But I'm not able to break decisively to the upside. And the only way it's going to break is to get into the 445, 453 area, somewhere around there. Then it says, hey, respect what I'm doing. I'm finding some kind of a base that says this is going to be time, duration, with some price objectives to the upside on a percentage basis. It could be quite good, but way horrible from the level that I was at, since I was at, what did I say round number high was? 439 before, and now I'm down to 422. But the weekly chart had a high of 569 just May of last year. I mean, a bear market in the commodities. And this is the Reuters equal weight commodity index. I think they have some of everything. And now look at this. This is the chart that I wanted to show you. I've shown subscribers this periodically. Look at this very long-term, very, very long-term support level from the low that was made way back in October of 2001, going to the low that was made at 323. So that low was, of course, it gets changed. But think of it as the low of October of 2001. My price is 183. It goes to double. It goes to 323 in December of 2008 after hitting 614 and peak E in July of 2008. July of 2008, huh? So we're looking. So that was a year, almost a year after the market topped, October of 2007. So then it made a low before the market in March bottom. This made 4 months earlier. In December, it made a low of 323. And then it went on to a high in April of 2011. Remember 2010, 2011. Let me just do this 1 second. Yes, it was 2011 in May that we had that sharp decline in the Dow. It was 22% or something like that, the only big decline we've had in 6 years. Oops, I did not mean to do that. So let me go to that. Am I right? Yes. So we're going to go back to the dollar TRCCI, Reuters equal weight commodity index, and lo and behold, we see that trend line finally got taken out. It got taken out, and what's holding? This coral color, this is more golden color in this particular instance. This golden color, a 200-period exponential moving average. And what does it do? It's holding for 3 months, 4 months if you include the close of close of March. And look at that. It holds it. This month so far it's holding it. If that commodity index takes out the low of 407.21 that was made back in March, that's going to suggest that this dashed green trend line, which is actually part of a channel, a down channel, will be hit sometime, and that goes to the 382 to 377 area. Wow. All right, so that's what I want you to show you. Commodity, bear market in commodities, and still going on. We'll see if it changes, and a lot's going to depend on the dollar. Dollar suddenly breaks down. The dollar suddenly slides to the 91 area over the next 3 weeks, and you got a different story altogether. Then you want to be owning gold. Then you want to be looking at the commodities. That's my thinking anyway. Certainly you want to be owning the euro. All right, so now let's get on with our story. And our story says that we need to look at some of these stocks. Now, I'd gone through this with you the other day. I'd said that the PPH is the one that I'm really keeping my eye on because they've been in a defensive area. They've been one of the leaders. The PPH is, in fact, the Pharmaceutical Market Vectors ETF. And it's still holding, had a lousy day yesterday, but still holding within that, what I was showing yesterday. But what I thought I'd do today, and I did show some of the stocks, I would continue just a little bit further. I wanted to show AGN Allergan holding just like that. Look at this, the weekly chart, just steady in a high level cup formation right there. a high-level cup formation, still holding, hasn't yet formed the arch, and that's what I'm looking to see. Is it a stock like Allergen, which has been just on a tear? A leg C, I could call this a G because of the way that the MACD is rallying like this, with a divergence between the stochastic, G/C. I'm just thinking that there's enough energy that Allergen is the one that's going to push the PPH a little higher by going above the 317.72 high. It's trading at 311.24, AGN up 258. I think it's going to make a D, and then we've got to be careful there. So we have no position yet in the PPHs. They used to have a shorter, but they don't. I haven't seen it. Maybe it's there. I just didn't see it. So the other one I want to look at, which I think is PRGOs, one that's been really, it's been on a tear. Oh, what happened to? Okay, notation's gone. So this is A, B, C. This is D right here. We've been watching it. What do I always do when I get a pattern like that? First thing I do is I grab the outer bars. Remember, the Chapman wave is the waveform that never sleeps. So that bar there, that high and that low, I just immediately engulf it with a rectangle formation, say that's my trading band, and then I actually try to tighten it up. I say, hey, you know what? I could have a smaller band because that's my first level of resistance and support. That's important. 172 on the downside and 201 on the upside. So that's what we're looking at for Perrigo. Perrigo is in fact one of the. Do they not make the drugs under pseudonym, under a name like a name brands? I think they do. All right. So that's Perrigo, a very important drug. And I wanted now to look at McKesson. I don't think I've updated the chart on this, but it has been an absolute. It had been a darling for a long time. Gone to a peak. McKesson, Healthcare Information Technology and Medical Distribution. Right there's an E. Let me type it in. I have to tell you, I'm looking at these charts and I'm suggesting to you that just be aware that things don't go up forever and that there is often a turn, but the stocks that have held the very best, that are still doing fantastically as other areas are starting to turn, could in fact just have a high-level consolidation and then one spike to the upside like a final relief rally, or what we can call it, a final flourish to the upside, a coda I call it, and then take a dive. And it did make a high with a doji candle in the weekly at E. So this is one that I would say is pretty much ready. It's already starting down. Hey, this is one to keep on you if you're looking at potential shorts or put options. This is one that I would say, hey, I wish it would have a nice bounce. I wish I had seen it 2 days ago. Actually, we do have one that looks just like this within the healthcare sector. Let me just double check. Wow, it took a dive and now it's come back today. But that was a 2-day dive of big proportions. Okay. Now, let's do this. I want you to look at the IYT. The IYT is the transports. Look at the down channel that it just can't get out of its own way. Look at the 9-period exponential moving average. This is the iShares Dow Jones Transportation Average Industrial Fund. And it's so close to breaking support. This kind of divergence, you can't ignore this. I like to ignore it for a period of time. And then I just say, okay, now let's go back to the transportation index. Let's have a look at it in a critical fashion and say, where has the market been? If there's a negative connotation between the IYT going down and the market's held up, what's doing it and what is the implication economically? In other words, you've got your airlines transportation average. Let me show you the airlines XAL. Look at this. Airlines having a nice bounce over the last couple of days, but basically doing the same thing. This is trough E. You would expect from a trough D or E a bounce, and you're getting that here, but it's only a bounce. And look at what's happening. The monthly chart has broken its flag support level. The weekly chart is, whoa, look at this. The weekly chart has changed from the resistance area that we were looking at right here. That that resistance line, actually, I'm even take it out. Once it's done, it's done. I don't like to have stuff hanging around when it's unimportant. It's unimportant. Out, damn spot. But that trend line was really important. Look at that trend line. It hit it exactly. Oh, I mean, is that amazing? 2 points of contact. I use the outer end of the candle. I found over the not dozens, 25 or more years that I've used channels, that they're very important. Trend lines and channels. This is a trend line. You need 2 lines, parallel lines, to make a channel. So this is the trend line, and this is what I would do. I'd make that green, and I'd normally make that red. And then what I would show, like I had before, except that one became redundant. This is the new one. And it says it got right into the Chapman wave inside track repellent zone. Pow! It came down. There's your H pattern. There's another H pattern. There's an M pattern because the H is continued. Lower lows, lower highs, and plop, it comes down. So this is now forming what? Can you see it visually? I just grab my tools and I go whoosh like that. And I go whoosh like that. And it says, watch out for the arch formation. If there's an arch formation, you can make a left side, right side price time match, but we've already extended. Look, if that's my plumb line from peak D, you're way to the right and you're holding quite well if that's the case. So that says this is the line that you need to be monitoring, right from here through that level. And that's the line. That would be my trend line, Chapman wave inside wedge, right there, and make it pink. And that says if the transportation index of the IYT at any point starts to take out the low that was made the week of the 12th of June at 89.93, watch out, because your target would be this trend line down in the 84s. Make it simple. And it says simply that you can be thinking that there's a bounce, and that bounce could be quite a nice bounce if in fact that bounce takes it to the high of the 22nd, week of the 22nd, to 102.68. But at that point, you would expect another arch formation to form. So we're going to be watching this nice bounce here. What about oil? USO. I'm going to go to the USO. You remember I spoke about oil in the weekly chart. I said lowercase h. Remember, this is the backdrop right there. Lowercase h goes to a lowercase m. And just stays in this thing. And I even had it. You remember I had this and I said, it's a little messy. I'm going to take it away because it's messy. I'm going to put it back now. I said a rectangle formation can last a lot longer than your patience. And that's exactly what's going on. Crude oil, it's not breaking out, it's not breaking down. It's just stuck there for now. And that makes sense. Okay. Basil, do you have a chart on VOD? VOD is Vodafone. No, I haven't looked at Vodafone for a long time. I used to follow it very closely, and then I thought, I never trade Vodafone. I just didn't know what to do. So it's A, B, C, D, E, pulls back. Does it make a lower low? 24.31, 24.42. And then it goes A, B, C, D. Hey, let me just do this. We'll treat it as if it was Friday's Chapman wave technical hour. A, from the lowest, most identifiable low bar. That's that bar right there. You'd have to check. I'm used to looking at these. I can see that that's lower than that. Then it goes A. You expect at least a D, C, D, and it goes to an E. But it actually goes to a little spike here. No, that's not good enough. So that's a D. And then look, MACD turns down. And what do we get as we go to the break? I'll put it in. Should we get a D? A, B, C, D, E. I'll be right back to talk about Vodafone when I get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 1-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Well, folks, we're back. Don't forget to listen to Daryl's Diagnostic Trading Hour, fabulous show. So listen to this. I was looking at Vodafone, but I just can't help looking at Whole Foods because evidently they were overcharged, systematic overcharging for prepackaged foods. However, the stock, which closed yesterday at 41.03, spikes up today and goes to, 41.03 was yesterday's close, spikes to 41.59, almost the high of a couple of days ago, which was 41.62, pulls back to 40.45, and where is it now? Hunch. So that's what happens with news. You never know, right? You think, oh my God, Whole Foods, oh, geez, they have to pay back a fortune. The lawyers are going to get a ton of money, and everybody's going to get back a penny over the next 7 years for whatever it is. That's usually the way it works. And the chart is just terrible. I mean, Whole Foods, I think it's going to be tough for Whole Foods. There's a lot of competition out there. I was in Whole Foods in last week. On Friday, I think it was, Union Square. Busy. Oh, yeah. I said to my wife, this is amazing. The young people today want everything immediately. You can't blame them because you get everything immediately. But at the same time, they'll stand in line for hours at a Starbucks, and at Whole Foods, we stood there. I could have eaten 6 times while I was holding the food that we were going to eat. It's a funny thing. I mean, what a funny thing that is. You'll wait and wait because it's fashionable to do whatever it is, but you do want things immediately. Yeah, it's the contradictory stuff that goes on in life. So let's go back to Vodafone, VOD. Yeah, there's resistance. I don't know, if you're holding it, just keep holding it. But it's like the Verizon, and it's the same sort of thing. Nice monthly chart pattern so far. Weekly chart is good. I don't want to interfere at all. If you're holding it, keep holding it. I would just say 37.66 VOD. If it starts to break under 35.50, then I'd say, hey, you know what? It's going back into the consolidation area. I don't know if you even want to change. It depends where you got in. But if you bought it today, I would not take more than a 1.25 point loss, 5% on a half position, something like that, even less, 3%. Because why? It needs to quickly go to the 38.50 area. It's a 37.66. Sorry, 38.30 to 38.55. It needs that. If it does that, it's got the cup formation. No, I don't want to interfere there. Okay, let me do this because we're about to go to, we're about to wrap up the show, and you're going to go to Daryl, and you're going to, what's today? Today's, you got the whole house. You got Daryl, you got Steve Rhodes, you've got Dave White, you've got Tom O'Brien, and then you're going to have Andy Hecht. I mean, what a full day you've got. So let's just go back to the VIX index. Let me just talk about it for a moment. VIX index is going to be really important. Why? Because if it remains down here in the low 13s and the 12s, it's suggesting there's enough buying pressure to maintain this high-level consolidation, continue the rotation. If all of a sudden, by early next week, you're starting to see 1375, 1430, 1456, 1530, and it keeps climbing like that, although I suspect if it's going to climb, it's going to climb really quickly, then you're looking at something different. And then you're looking at the chance that bad news filters into the market together with a higher VIX index suggesting selling pressure. Keep it as simple as you can. And if you're short, like my subscribers, we actually took profits in one of our longs today, nice profits. We're kind of out there. Mostly now we've got shorts, and I'm just tightening up the stops. I want to see that everything works nicely. I'm not prepared to put my head on the, well, I'm not prepared to take a big risk. I just don't see why it's necessary, because when we get a trend that successfully tells you that we're going down with the Dow in the 17,600s, trying to test that major 17,500 support, that's different. Now you're starting to see the velocity go to the downside, and that's really what we want to see. So there'll be plenty of time. You don't have to rush and panic that you aren't short enough or short. You'll have your chances. But meantime, keep stop.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.